Hey everybody, so I wanted to go over BABA with you. As you guys know, this position for us was a leap trade that was taken earlier in the year and actually pushed up close to 900%. We had in the monies and then out of the monies, closed the in the money, which was a higher delta. When I say leap trade, by definition, more than 365 days. Those are no longer leaps, but still have 330 days to go. And those calls today were still up from the dollar entry. I know it sounds crazy, but we were in at $1, and these current leaps are going for $8. Now we have gapped up again around $6, and so I want to go over Baba and kind of identify some levels with you. I had a 2025 target, and quite honestly, this 2025 target should have been up here in the red. So basically, 217 and above is what I'm looking for. But we are to a major target that has obviously made us some really good money already into this year. I want to go over why I bought this. So, first of all, we came into trendy edges. So, you guys can see that last year we were accumulating, not we as in not me, but the market was accumulating down here at the trendy edge. And remember, trendy edges identify demand on the bottom and supply to the top side. So, example, buyers accumulated here, prices then pushed up, hit the upper trendy edge, and then we rejected. Now we came in and I noticed we were getting very close to that lower edge again and this lower edge. And so I combined the two, made a zone, and price came into that zone. We got long. And this is where things really worked out for us. Now, as I've said before, the edge that you get with supply and demand is we are lining ourselves up with bigger money, and we take advantage of the big move. And what happens is the old way of thinking years ago, although I am still a retail trader, I do not think like a retail trader. Retail traders tend to think like everybody else, and that's normal, right? You're going to learn how to trade. You're going to learn from somebody who's learned from somebody who's learned from somebody. But I feel that my education has really taken me a lot further than the typical mindset. And I had to pay for that education. I used my GI Bill after I retired from the Air Force, and I learned about supply and demand. I'm forever thankful because it really does keep things on the right side for me. So the idea was that when price got that big spike, we wanted to take some profits and we did so, and then we'll continue to hold. I'll continue to hold. But I am still looking for price to move here, but there is obviously going to be some setbacks. I'm sure there's going to be some macroeconomic events that will, pull BABA to the downside and so forth. So we want to know what exactly, are those levels that we want to concentrate on. So when I do this, what I'm going to do is place my coefficients on the last two monthly candles. And far as this trend is concerned, it stays intact as long as 104 holds. Okay, so using the golden Fibonacci here. Now, far as a bullish trend, as long as price holds above 120, then I continue to think to the long side. Now, I don't have to do anything. My trade is completely paid for. Even if this trade went to zero, I would still make money. And that's what I love about leap positions. However, all right, if we're at 140 right now, so when we look here, 140, if we were to come up here, basically right in this area, which is super bullish, okay? So if we can at least consolidate, okay, 120 to the high somewhere in here for a week or two, then things start to look really, really good. So here we are. There's that first week of consolidation. And again, holding above the 23.6. And now we are above the 140 level, which is super bullish. So it's a if this, then that. If price breaks above here, we'll look for a next level to the upside. And if price were to break down, where would I want to get long again? And that would be right there at 111. Now, when I have leap positions on, the beauty about this is that you can add into this trade. I can add into this trade, but I can also protect it by using levels that are demand or support or Fibonacci's. So in this case, on this pop tomorrow, what I'd like to do is start to protect myself and maybe add into a couple ideas to the upside. So I'm looking at maybe on the pop to add a position a couple weeks out to for prices to break down and potentially come to 120, 110. Now that's really out of the money. I get it. It's like $20. So I don't want to spend a lot of money on a hedge. Hedges kind of suck at the end of the day. Sure, if we hit them, they pay off, they can pay for the long side. But at this point, I've already made so much money and I'm happy that I don't want to spend my money and lose what I've made, basing it on, in the money puts or something like that, just because I feel like price is a little extended. Okay. So I'm just simply going over levels that I'm identifying that I personally would hedge. And that's going to be the 120 to 110 level on this pop since we're up towards 140. Now, what if we take out the high? That's where we start looking for the back end of this zone right here for the 2025 target. My next target is going to be 157. Okay. So a couple things I can do is I can buy a couple weeks out. I could buy put debits for 120 by 110. I could buy straight up puts if they're super inexpensive. I would imagine that 120 or the 110s are actually pretty cheap if I go out a couple weeks. And then the next thing is what about the move to the upside? 157, we're sitting at 140. The ATR is really important. It's saying right now that the weekly ATR is 10. That means the weekly average trading range is around $10. And 157 is about 17 out. So I'd at least buy a month to the upside, even though we know we could hit it a lot quicker. Just to be safe, I could be aiming for the 145s to 155s with a call debit spread, or I could just trade the call straight up at the money. Just depends on what you like. But those are my two major levels. Again, guys, what I'm really looking for is this red zone by the end of the year. As far as like consolidation, it happens between the high and all the way down here towards 111. And far as a put protection for myself, if I want to try to hedge the idea of moving up towards 157, then I can do these levels down here that I just talked about. If you guys have any questions, please reach out to me. Don't forget we have a free webinar tomorrow morning. Tomorrow afternoon around 7 p.m. Central. So if you want to sign up for that, you can do so. I hope to see you there. Have an amazing day.